Now, to review the market activities in 2013 and to get an outlook for next year, I'm now joined by Tunde Obaniyi, team member, capital markets at UBA Capital. It's great to have you on the show with us, Babatunde. Let's start with that market, as I said, up 40.26% this year. Now, a lot of analysts that I spoke to a few weeks ago on the show said that they didn't actually expect to see that index go over the 40% mark. And of course, that's something that we're now seeing. So your thoughts on how the market has done as a whole this year?
All right. Good afternoon, Didi, and many thanks for having me. Like you rightly said, we've seen the market come up to about 40% year to date, and that's also on the back of the impressive run we saw for 2012 year. And there are so many factors that are responsible for that. I mean, first is that we have to look at the fundamentals of the market. Benchmarking what we currently, the parameters of the market with other emerging markets of the world, you find out that there's still value in the Nigerian market. And I think people are just taking advantage of the value. And back to the question as regards the primary market in equities. Well, 2013 has not really been a very impressive year in terms of number of issuances or the fresh capital that has been raised from the equities market. But having said that, we are quite optimistic that 2014 will be a better year. Why is that? Like you rightly said, that if you look at the run we've seen in the market in the last 2 consecutive years, it shows that there is a lot of interest, particularly from the foreign investors, from the institutional, like the pension fund, the mutual funds, and the insurance companies. And also, we are beginning to see the inflow of the retail investors back into the market, which is quite fantastic. This year alone, we've had about 5, 6, 7 right issues. And it's been really fantastic, saying that they were really fully subscribed, and that shows that there is interest. So on the back of this, we expect that in 2014, this run should continue. And since we now have a solid and vibrant secondary market to support what is happening on the primary market side, then we're quite optimistic that we see more issuances in 2014. And also, if you look at some of the things that have been happening in the economy lately, the first is to look at what has happened in the power space, where you have people come to buy assets. We know that sometimes in 2014, the owners of this asset are definitely going to require capital for expansion, for their capex plan. And we know that, the banks alone cannot fund all these programs. So we're quite optimistic that 2014 holds a very optimistic year and is going to be very busy for the capital markets, particularly on the equity side.
You mentioned that there's still a lot of value in the market. We've seen the oil and gas sector do very well this year. It's the top performer so far, up 98%. So going into 2014, where should investors be placing their money? What sectors?
For 2014, we'll still be very bullish on the consumer goods space. Like you rightly know that Nigeria is supported, the market is supported by the strong demographics. In a country of about 173 million people, you have a vibrant market that is driving the revenue for the consumer goods. I mean, these are necessities that no matter what happens, you still have to buy this product. So we believe that the vibrant and the upcoming middle class we have and the strong population we have will continue to drive. And also, we've actually had an increase in the middle class. I mean, if it has emerged, the last estimate comes to about 45 million Nigerians are within the bracket to be able to afford a bit of luxury goods. And we see that driving the demand going forward. Also, the financial services will continue to also be relevant going forward. Like I rightly said, that there's so many things that are happening. If you look at 2013, it's been a fantastic year for the banks. There's so many things that they finance in the rich sector, and all the reforms that we've seen in the last 2, 3, 4 years, it's now beginning to manifest, saying that we're seeing the banks financing the rich sector, which they are meant to do. That we've seen clearly in the power sector. We hope that will cascade down to other economic structure and next year. So we're very bullish on the financial services side, on the consumer goods side. And like you rightly also said, that even on the petroleum marketing side, that's the downstream sector that is represented on the secondary market. We're also very bullish that those sectors will do very well next year.
Let's talk about inflation numbers. We saw inflation numbers out this week. So let's start by getting your thoughts on those numbers.
Well, first, it's largely expected towards the end of the year to see a bit of uptick from the run we've seen or from the trend we've seen over the last 4 or 5 months. It came to 7.9, though there was a bit of uptick, but we still feel that that's a very good level to settle at towards the end of the year. Of course, you know that the Yuletide season, the spending for this season is going to drive what we're seeing. Having said that, I think that looking forward into 2014, we still see the inflation trading around the single-digit rate, and that is what matters most, because if we have the interest rate at 12%, the interest rate for the Naira, and the inflation still at 7.9, thereabout, then you still have like a 4.1 positive carry on holding the Naira. And we hope that, we are very optimistic that that trend will continue into the coming year. The only downside risk to our outlook is the election coming up. By the time we get into 2014, then we'll be ramping up towards the election year, which comes in 2015. So we expect to see a lot of spending on the side of the government, on the side of people that are preparing for the elections, and also so that will be a major downside risk. Also, we know that the incumbent CBN governor rounds off his tenure sometime in summer next year. He has done really fantastic well in defending the currency, in maintaining a very stable inflation rate. So those are the downside risks, because we don't know what the incoming CBN governor, what the policies will be. Is it going to continue in the trend? Maintaining the stance that this current CBN governor has maintained thus far? We are not sure. So those are going to be the downside risks, inflation outlook for the 2014.
Now, knowing some of those risks that you mentioned there, you mentioned the Naira. So what do you think will happen to the Naira in 2014? Well,
the same thing as we've seen on the inflation side. I keep reiterating that, we found that we heard during the last MPC meeting that the CBN governor made a very categorical statement saying that it's going to do all it takes to defend the Naira at the level at which you currently have it. And I think that's very fantastic. It reinforces the confidence that people have in the currency. But to what extent can we do that? We are not sure. But also, if you look at the policies of the government that we are beginning to see, like the automobile industry, the policy saying that they are restricting the importation of cars. Because what we currently have is that the petrodollar we earn from the sale of oil is actually being filtered back through the importation of goods and products. But what we are now trying to see is to limit the extent at which people repatriate back these dollars from the economy. And as soon as this policy begins to work in 2014, we're quite optimistic. For now, though the foreign reserve has come to a year low of about $44 billion, but that's still very sufficient enough to finance about 6 to 9 months importation in the coming year. But we also believe, we now have a stable oil production. We are pumping more than 2.5 million barrels, around 2.5 million barrels on a daily basis. And if this trend continues into the coming year, then we see no risk of us not being able to defend the currency at the level which is currently trading.
But what does all this mean for GDP growth next year? We of course know about the GDP rebasing exercise. So what are the implications on the growth?
Okay, first I'll take you through the rebasing exercise. What we currently have is to use as base figures, the 1990 figures. And that shows that over 23-year period, we have not rebased our GDP. Economies that are very close to us, it's a common practice, which is the best practice, is to actually rebase your GDP in the space of maximum of 5 years. You have people that do it every 3 years, every 2 years. And if you look at the structure of the economy from 1990 down to where we are, there's been a lot of changes in the structure. There's been, the dynamics have actually changed. 1990 figures, that was about the time that there was a liberalization of the banking sector. And if you look at how the banks have grown over the last 23 years from the liberalization, where you now have the incoming of the new generation of banks, and how they've actually grown the sector in multiple folds, that's one. If you look at the current classification we have, the telecoms is not adequately represented, because the massive growth we've seen in that space has come on the back of the privatization and the liberalization of the telecom sector. So what this does is that it makes us to compare apple with apple, saying that you bring out the reality of the Nigerian economy, the potentials we currently have, and people can dissect the economy as it were. On the side of growth, if we rebase the GDP as has been purported, We're expecting about 30% to 40% upside in absolute size. So a GDP of around $270 billion can go as high as almost $400 billion when it's rebased. Now, the implication of this on growth is that the 7% growth we currently have, we might not be able to grow at that rate. Maybe at best we will go at around 5% once it's rebased. But in absolute time, in the magnitude of the size of the GDP, we will still be way better off than where we currently are. And it helps the economy to actually know which sectors are driving the economy, and it makes it easy for us to benchmark our economy with other economies of the world.